Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the potential of the current administration for giving $10,000 worth of student loan debt. So in this video, we're going to be talking about how this is going to impact SOFI Technologies and their SOFI stock, and then later we're going to go over the latest news updates for Palantir Technologies. For the three articles that we are going to be reviewing and analyzing today, their titles are What Would Biden's Student Loan Forgiveness Plans Mean for SOFI Stock? Then we're going to move on to determine why this particular author wants investors to sell SOFI stock based off of the current dead cat bounce. And then lastly, we're going to talk about Palantir Technologies PLTR stock, and we will calculate what the PLTR stock should be currently worth right now based upon their current growth trajectory. So with that being said, remember to go and smash that like button right now, comment your thoughts down below about SOFI Technologies or Palantir's PLTR stock, subscribe if you are new. Also, I want to point out that Webull, which is a brokerage platform similar to Robinhood where you can buy and sell stocks and cryptocurrencies, is having a fantastic deal. So if you want free money, listen up. So if you sign up for Webull and invest $100 into any stock that you choose, I personally would invest the $100 into ticker symbol VOO, you will receive 6 free stocks and you will automatically be entered in to win $12,000. So if you want free money and some free stocks and you want to be entered in to win $12,000, go to the link listed and linked in the description box down below, sign up, invest, and I wish you the best of luck. But without further ado, let's jump right into today's stories. So SOFI Technologies, ticker symbol SOFI, is a fintech company, and they offer their customers an all-in-one inclusive app that gives them anything they could probably or possibly need in terms of financial services and or financial products. Currently, the SOFI stock price trades for around $7.55, which in my opinion is a pretty good discount if we weren't in such a negative bearish market. The low-end analyst price target for the company goes as low as $7 for the next 12 months. However, $11 seems to be analysts' average or median price target for the company, while $22 is their high-end price prediction for the SOFI stock over the next 12 months. And recently, the SOFI stock price has increased by around 4%, which is absolutely phenomenal. And this came very close to a report from the Washington Post, which said that the White House is nearing a decision to cancel at least $10,000 worth of student loan debt for student loan borrowers regarding their government loans. And this is going to apply to Americans who earn less than $150,000 individually, but if you file as a joint married couple, then this will apply to households that bring in less than $300,000 per year. However, recently a White House spokesperson actually called this report somewhat inaccurate, and he says, and I quote, "No decisions have been made yet, but as a reminder, no one has been required to pay a single dime of student loans since the president took office," end quote. So although this White House spokesperson and representative didn't outright deny the report, he is just reminding us that an official decision has not been arrived at yet. However, meanwhile, the CEO of SOFI Technologies, who makes a lot of money, is actually a supporter of the student loan forgiveness, which is actually really cool to see, because although this is going to temporarily hurt SOFI Technologies to a small degree, SOFI Technologies still makes a lot of money off of student loan refinancing. And this is one thing that I do like about SOFI Technologies. They are actually for the individual. I also want to mention that SOFI was also in favor of the White House extending the student loan moratorium to August 31st. And this means that if you have student loans, you don't have to pay on your student loans right now, and they are not accruing interest. SOFI Technologies also says that the extension of the student loan moratorium again is not going to hinder them much, even if they extend it all the way until the end of 2022, and then the potential $10,000 student loan forgiveness will also not significantly affect SOFI Technologies' overall revenues. SOFI Technologies even says, and I quote, "It's time to do the harder right thing instead of the easier path of kicking the can down the road and wasting taxpayer money." And this article highlights that roughly around 43 million people in the United States carry student loan debt that add up to around $1.5 trillion worth of federal student loans, which would be the thing that is going to be forgiven by the federal government. And if the $10,000 student loan forgiveness goes through, that is going to wipe out debt for around 12.8 million people, and it's significantly going to help out around 7.7 million people, which is going to be absolutely phenomenal. So I really like how SOFI Technologies is all for this. However, with that being said, if you have already refinanced your student loans, which would have been very good to do during the pandemic when the interest rates were very low, this is not necessarily going to apply directly to you. If we jump over to our next SOFI Technologies article, we can see that SOFI Technologies stock has actually been staggering and extremely volatile lately due to the macroeconomic environment that we are in, and the author of this article actually warned investors to sell the stock after their Q1 earnings report. And this may seem like good advice in the short term because their Q2 report is not going to be as good as their Q1 report, which of course will probably scare investors and it will push the SOFI stock price even lower. The author of this article is somewhat bearish on the SOFI stock price, so I want to at least expose you to the opposite view to see what it has to offer. For instance, he says that investors should use this dead cat bounce in his opinion, which he is referring to the 4% increase in price lately before the stock price plummets again. And a dead cat bounce basically is when a stock is crashing and then it hits somewhat of a support level, it temporarily jumps back up and then it starts falling again. So right here would be that dead cat bounce, and he believes that this 4% and what's happened recently with the stock price is the best time to sell before the stock price continues to tumble downward. However, for me, I am a long-term investor into the company, so I really don't care what it does in the short term as long as in the next 10 years the stock price is above what I bought it for today or even recently. He also says that due to the harsh macroeconomic environment right now, with threats of a recession, the stock market entering into a bear market, and higher interest rates, this is going to negatively impact the SOFI stock price pretty dramatically overall. However, he does say that the consensus among professionals and analysts for SOFI Technologies is actually rather bullish, and their top-of-the-line growth for the full year of 2022 and 2023 actually could be pretty impressive due to their aggressive growth outlook. In a recent 10-Q filing, SOFI actually reminded investors this, and I quote, "Increased interest rates may decrease borrower demand for our lending products even as inflation places pressure on consumer spending, borrowing, and saving habits. Borrowers face uncertainty about the impact of rising prices on their ability to repay a loan. A change in demand for our lending products and any steps we may take to mitigate such change could impact our credit quality and overall growth. Furthermore, inflationary and other economic pressure resulting in the inability of a borrower to repay a loan could translate into increased loan defaults, foreclosures, and charge-offs and negatively affect our business," end quote. So overall, SOFI Technologies knows exactly what they're doing. They are an extremely resilient company, and despite rising interest rates, student loan forgiveness, threats of a recession, and geopolitical tensions, SOFI Technologies is more than capable of not only surviving but actually thriving. I do want to mention that SOFI Technologies is actually in the red when it pertains to their generally accepted accounting principles regarding their earnings per share. So that would be their GAAP EPS if you're paying attention, and that is going to be very negative for the full year of 2022 and 2023. However, like we've said before on this channel, by the end of 2024 or beginning of 2025, SOFI Technologies is going to become profitable, at least on an adjusted earnings per share basis, which is very positive. Also, Wall Street as a whole, along with many analysts, are bullish on SOFI Technologies, with 8 analysts out of 13 saying to buy the company, and 5 of these analysts actually saying to hold the company, while none of them actually indicate to sell the company like the author of this article is trying to say. Now, I do think he is 100% right when he says that adding stocks such as SOFI stock very aggressively is probably not going to be be a good idea considering the current stock market environment, and that investors shouldn't over-allocate their portfolios to risky stocks such as SOFI Technologies, and I completely agree, which is why I always try to advocate no more than a 5% initial investment or allocation to a particular single company, which would include SOFI Technologies. So if you have a $100,000 portfolio, you're only allowed to invest around $5,000 into the SOFI stock. And honestly, I would split that 5% over a couple of months. For instance, I would want to take that 5% or that $5,000 and I want to dollar cost average that $5,000 into the SOFI stock over the span of a few months so I can get a good average price. I also want to add that SOFI Technologies is rapidly scaling their revenue, which is another reason why Wall Street is very bullish and positive on this overall stock, because Wall Street believes that the company could bring in or scale at a rate of around 39.4%, which is absolutely crazy. Yet the author of this article still says and urges investors to sell the SOFI stock price during this dead cat bounce to reduce overall risk. And I actually agree somewhat with him, and I'll tell you why. If you are overexposed to SOFI Technologies, feel free to lower some of your exposure. However, if you're like me and you haven't already overallocated yourself, you have a very good average price, and you're willing to hold this company for the next 5 to 10 years, then honestly, just sitting and waiting could be the best strategy. But I would love to hear your thoughts down below about this. Lastly, we're going to talk about the latest news updates and price prediction according to this author for Palantir Technologies. And if you didn't know, Palantir Technologies is a leading software company that mainly revolves around the big data and analytics business. So right now the PLTR stock has actually uptrended pretty well, where the current stock price is around $8.85, which is pretty good in my opinion. However, according to analysts, the low-end 12-month analyst price target is around $6 for the company, while the average price consensus sits around $12.12, and the high-end analyst bullish price prediction goes as high as $25 per share. So overall, this is very good news pertaining to the PLTR stock, but let's actually see if the company is a good buying opportunity even at its current price. So let's see what this author has to say. He reminds us that Palantir Technologies was co-founded by Peter Thiel and Alex Karp, where Alex Karp is the current CEO of Palantir Technologies, and Peter Thiel also was a co-founder of PayPal, and he was one of the first large investors into Facebook. So we're going to talk more about that a little later. So both of these guys are very accomplished, and this company was originally funded to help the CIA. Currently, as you can see from the stock chart down below, it has been downtrending very dramatically lately to where the stock price has dropped to one of its lowest valuations and an historic low multiple, which necessarily means that the company is undervalued intrinsically based upon the company's past stock performance. However, this doesn't mean that necessarily it's a good buy, because for that we would have to look into the business model, their management, and their financials. And of course, you all know that I love talking about those exact things, and I'm going to remind you of them right now. In a nutshell, Palantir gives organizations as well as governments the ability to unlock their data, to analyze very large data sets, to help these organizations' management make better and faster decisions. For instance, they helped the CIA actually track down terrorists, and they help a plethora of other companies with things like supply chain and just general decision making, which would include the US Army, Airbus, the Royal Navy, Scuderia Ferrari, Morgan Stanley, and a plethora of other companies. They have 3 main platforms. The first one would be Foundry, which is used for their commercial customers. And recently, we even did a video on Stellantis and how Stellantis has signed an agreement with Palantir Technologies to use their Foundry platform. And if you didn't know, Stellantis is a global auto manufacturer which makes Fiat, Chrysler, Dodge, Alfa Romeo, and many other vehicle brands. So overall, this was a huge partnership. The next platform that they're very well known for is Palantir's Gotham platform, and they use this to help the United States military and their allies through artificial intelligence. This can literally provide the US Army the ability to track Chinese warships in the South China Sea. And they do this by utilizing hundreds and hundreds of satellite images to where they can use their artificial intelligence to even track these ships to determine what their warpath would be, or if there are any anomalies for these particular ships. And then lastly, they have their Apollo platform, which is mainly used for managing products and software across major companies such as Airbus, Hyundai, Rio Tinto, and the United States Army. Palantir Technologies is also growing their financials to where year over year they grew their financials by around 31%, but particularly they are growing their commercial segment by leaps and bounds, because recently they increased their commercial revenue by around 54%, which I predicted literally over a year ago, where Palantir is going to take their commercial segment and scale it much more rapidly than their government segment, and their commercial segment is going to be not only the thing that is going to bring them in more revenue than their other business segments, but it's also going to be the thing that turns them profitable in the year of 2025. And of course, this is also really good news for their free cash flow, because the company was able to produce around $225 million worth of free cash flow in the last trailing 12 months. Management also projects that they're going to grow their overall revenues by a 30% CAGR from now until 2025. The company is financially strong because Palantir Technologies has $2.2 billion worth of cash and virtually no debt, and this cash is just sitting on their balance sheet. So this company is extremely liquid, and they have billions of dollars at their disposal. On top of that, the big data industry, which of course Palantir is a part of, is rapidly growing, and it's set to be worth around $276 billion by 2026. Now, this is where the author of the article actually tries to value Palantir Technologies using a discounted cash flow method for valuation. If you want to look at his numbers and his assumptions, they are here on screen, but I'm going to skip over this because I don't want this video to run too long. Right now, the PLTR stock should be worth around $10.32. And honestly, even though I think this is somewhat low, I think for a 12-month price prediction, a $10.32 price target for the current stock price of around $8.85, even though at the time of this article, the price was only $7, could be extremely accurate, which means that the company is currently undervalued by around 32% if the current stock price was trading at $7 per share. Overall, this is a very sensitive stock. It is a phenomenal growth stock, and although the current stock market sentiment is rather muted and negative in the short term, Palantir Technologies does look like a good long-term play, especially if you're willing to hold the company over the next 10 years and you have a very low average cost basis for this company. So I would love to hear your thoughts down below about SOFI Technologies and Palantir. Subscribe if you are new, and I will see you in the next YT video.